Good morning, hunters. Welcome to the Daily Hunt for Multibaggers, your essential guide to navigating the market. It's Thursday, March 12th, 2026, and we're looking at all the hot leads and market chatter from yesterday, March 11th.
That's right, Ethan. Our AI has been sifting through a pretty substantial volume of posts, flagging a good number of different stocks. Overall, the market sentiment is a real mixed bag today. We're seeing some incredibly aggressive optimism for certain names, but also a healthy dose of caution, driven by some interesting financial metrics.
Plenty to dig into, so let's get right to it. First up, let's talk about Micron Technology Inc., ticker MU. The buzz is all about their forward-looking guidance, Brooke. We're talking record revenue of $18.7 billion and an 8.42 EPS projection for next quarter. This is huge, driven by that insatiable AI infrastructure demand. Revenue growth is already strong at 0.567, and get this, over 860,000 shares were net purchased by insiders. We had them at a cautious buy most recently, but this feels like a significant upgrade to me.
Well, Ethan, that is undeniably strong guidance, and the insider buying certainly signals confidence. However, we're seeing a PE ratio already nearing 40, which indicates a lot of that growth potential is already priced into the stock. While I appreciate the optimism, the market itself is debating whether this guidance is realistic or conservative. We need to ensure that the execution matches these lofty expectations to justify the valuation.
I hear you, but the AI tailwinds are robust, and the historical performance speaks volumes. I'm feeling pretty confident about their ability to meet those numbers.
Given the strong revenue growth projections and that compelling insider activity, there's a strong argument. But for any new investment, it's wise to acknowledge the high expectations already built in.
For MU, our AI-generated insights suggest a buy. The growth drivers and internal conviction are very persuasive. Next up, Nebulous Group NV, symbol NBIS. The social media chatter around NBIS is absolutely explosive today. Users are ecstatic about a massive $2 billion investment from NVIDIA. They're calling it the hottest AI stock and the winner of the Neo-Cloud Gold Rush, with some truly ambitious price targets like 500 by 2027. It's seen speculative gamble ratings in the past, but this NVIDIA money changes the whole game, don't you think?
Ethan, I have to pump the brakes a bit here. While the NVIDIA headline is certainly attention-grabbing, the underlying financial metrics for NBIS are frankly alarming. Their price-to-earnings ratio is over 1,000, and their operating margin is a highly negative 102.99%. That means they're losing significant money from their core business operations, and their debt-to-equity ratio is over 105%. This is a company that, by its current financials, is in a very precarious position. The $2 billion from NVIDIA is potential future growth, but it doesn't change their current unprofitability or high debt load. This is a highly speculative bet on future execution.
But the community optimism is off the charts, Brooke. They see a massive long-term transformation. They're looking past the current numbers to what this NVIDIA partnership could mean.
And that's exactly why it requires extreme caution. The market is pricing in a complete turnaround. Any deviation from perfection and those past bag holders we heard about might return. The current KPIs are a bright red flag for a fundamentally sound investment. For NBIS, despite the immense community optimism, our AI-generated insights still point to stay away. The financial health simply doesn't support the current valuation.
All right, let's pivot to Hims & Hers Health Inc., ticker HIMS. We're seeing YOLO posts, targets of $30 to $40, and even talk of a short squeeze with a significant portion of the float being shorted. The big news is a lawsuit with Novo Nordisk is cleared, regulatory hurdles are easing, and they're aggressively expanding into the high-growth obesity drug market. Plus, there's been substantial insider buying, over 44% net shares purchased in the last 6 months. We had them as a buy on March 7th, and these new catalysts make it look even more compelling.
Ethan, there's definitely some strong momentum and clear catalysts, and that insider confidence is a huge plus. But we have to look at the numbers. The PE ratio is still quite high at over 50. Their debt-to-equity ratio is a staggering 207%, indicating heavy reliance on debt. And with a beta of 2.6, this is a highly volatile stock. While the growth potential from resolving legal issues and entering new markets is real, the current valuation and financial leverage suggest a significant amount of risk.
But with strong revenue growth at 0.284 and the strategic moves, they're clearly in a land grab phase, trying to capture that market share. That's where the multi-baggers are found.
Absolutely. The growth story is active, but a disciplined approach means acknowledging the elevated risk profile at this valuation. It's a balance.
So for HIMS, balancing that excitement with the inherent risks, our AI-generated analysis suggests a cautious buy. Finally, NVIDIA Corporation, symbol NVDA. The AI king reigns supreme. Today's discussions emphasize consistent demand driven by AI infrastructure. We're talking 0.732 revenue growth, an incredible 55% net profit margin, and an ROE over 100%. Analysts maintain buy ratings, and their strategic moves like launching Nematron 3 and that $2 billion investment in Nebulous just reinforced their market dominance. We rated them a cautious buy yesterday, but all this new data makes me feel even more bullish.
Ethan, NVIDIA's performance and innovation are truly remarkable. They are a market leader, no doubt. But the post itself warns that expectations are already sky high, and that the stock can wobble fast if AI spending slows. Their PE ratio is 38, which is certainly a premium, but the price-to-book ratio is an eye-watering 28.74. That's an extremely high valuation. Also, their debt-to-equity ratio is 7.255, which is quite high. They are priced for near perfection, and while the growth is real, there's little margin for error.
They keep delivering, Brooke, and the chip shortage is expected to last longer than anticipated. They're constantly expanding their ecosystem and leading the charge in AI.
Unquestionably a phenomenal company. But for new short-term investments, such a premium valuation and high leverage warrant a degree of prudence.
So for NVDA, our AI-generated commentary suggests we maintain a cautious buy. It's an undisputed leader, but the valuation is certainly reflecting that leadership. Well, that was a packed session, Brooke. Some real market movers today.
Indeed, Ethan, a good mix of growth potential and critical risk factors to consider.
So for today's deeper analysis candidates, here's what our AI has flagged. Investigate as buy. Micron Technology Inc., MU. Investigate as cautious buy. Hims & Hers Health Inc., HIMS. Investigate as speculative gamble. Nebulous Group NV, NBIS.
This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Absolutely. Thanks for joining us on the daily hunt for multibaggers. We'll catch you next time.